So Regeneron Pharmaceuticals just released their Q3 earnings report, and it is pretty darn good. Even though we did see the revenues drop 15% year over year, I am really liking the progress that this company is making. I am excited about Regeneron, even though we did see their earnings drop year over year. My excitement, even though we did see earnings drop, has to do with comps, or comparisons, which is the first topic of this video. And second, I will discuss why I believe analysts are criminally underestimating Regeneron. So let's get right into it with first, tough comps. In the investing business, earnings are always being compared to earnings of last year. That is normal because we do want to see consistent year-over-year growth. But at times, this is an unfair comparison to make. For example, if a company had a really shitty year because of outside circumstances, or maybe they had an extremely good year because of similar outside circumstances. Regeneron is one of those cases where comparing to last year isn't the most optimal way of looking at this business. You see, 2021 was amazing for Regeneron. And that is mainly thanks to this bad boy, their emergency use COVID-19 treatment, which had super high demand during the entirety of 2021. Hence, Regeneron earnings freaking skyrocketed during 2021. And now we are comparing their 2022 earnings, which basically do not include any revenues from Regeneron, to 2021, where Regeneron made up roughly 30 to even 40% of their total revenues. Hence why I believe this headline figure of a 15% decrease in revenues isn't the number we should focus on. This number, I believe, is the one we should be focusing on. An 11% increase in total revenues, excluding Regeneron. And that number tells us that even though the headline figure is actually down, the underlying business is growing year over year at a double-digit pace as we speak. Really, this earnings report tells me that Regeneron continues to execute. Their pipeline of new potential medicines is progressing nicely, and the company has actually acquired the full rights to Libtayo, which is a big plus on the short term, but is suppressing earnings on the short term. All in all, in my opinions, Regeneron has provided us with another blowout quarter. During the last 12 months, the company has provided us an EPS of $56.12, which puts the company at a 13 PE ratio, assuming a $750 share price. Keep in mind, we can expect this trailing 12-month EPS figure to decrease a little bit more going forward. I'm personally expecting the full 2022 earnings to come in around the $45 to $50 mark. But after Q4 2022, there'll be no tough comps or comparisons anymore. And from there on out, I do hope we see consistent double-digit growth in EPS for years and years to come. After all, that is what my investment thesis is based on. High double-digit growth in EPS from this year well into the future. And with this quarter, Regeneron has proven once more that they are capable of just that. But still, analysts are underestimating this company consistently. So let's talk about why analysts are wrong. First off, this is the track record of analysts covering this company. In Q4 2021, they underestimated the company by 17%. In Q1 2022, they underestimated Regeneron with 17%. In Q2 2022, they underestimated by 7%. And this quarter, they underestimated by another 16%. What the freak is going on here? And by the way, it's not just Google stating these numbers. The Nasdaq website shows us similar earnings expectations and similar earnings beats. Actually, the Nasdaq website predicted an even lower figure for this quarter at just $8.55. So either Google and the Nasdaq are pretty bad sources for analyst estimations, which to be fair, they probably are, or Regeneron is being criminally underestimated, which according to my price predictions, it certainly is. If we assume my $50 in EPS for 2022 is close to being correct, in that case, Regeneron could easily be worth $900 and far beyond at this moment in time. But it isn't. At this moment in time, Regeneron is worth just $740 on the stock exchange. And in my opinion, the market is not reflecting this really good earnings report as it should be doing. Of course, earnings beats aren't the entire story, but it is an earnings beat on top of a company trading for a really reasonable price to earnings ratio. And these analyst predictions are getting even worse. Their yearly earnings forecasts for 2022, 2023, 2024 and 2025 are honestly just dog shit. Maybe this high EPS forecast is being close to being grounded on reality, but even then the 2022 figure is almost being beaten by just the first 3 quarters of this year already. So analysts are consistently underestimating this company, which has been growing its earnings with high double digits for over a decade already, and that, my dear viewers, is an opportunity. Again, according to my opinions, Regeneron is trading at a super reasonable price to earnings ratio, and they have been consistently growing their profitability for a really long time already. And that is why I continue to hold this amazing company. And hopefully I will continue to hold this amazing companies for years and years and years to come. Full transparency, Regeneron makes up roughly 25% of my portfolio, so you should be taking my opinions with a huge grain of salt. Anyways, those were my opinions on this earnings report of Regeneron. Hopefully you did like this content, because I do hope to release a similar video tomorrow about UWMC's earnings report. And with that said, thank you so much for watching. I love you all. Peace.